All right, in this video, I'm gonna go over the reality of investing in Vancouver, how it is, and what to expect. I'm that agent Kelly. I talk about Canadian real estate investing in my local market of Abbotsford and the Fraser Valley. And if you guys get any value or entertainment from this video, please subscribe to my channel, like this video so I can get out to more people like you who want to learn about Canadian real estate and the Fraser Valley. And if you want to chat one-on-one, you can do so by booking yourself into my calendar with the Calendly link I provided in my description. Okay, so I primarily work with investors, mostly, I would say. And a question that I get all of the time is, what do you think this unit will be worth in 5 to 8 years? Now, a market like Vancouver is pretty much impossible to spreadsheet out and forecast over a 5-year time period because some years we're down 10%, other years we're up 30%, some years we're down another 10%, then we're up 20%. It's super difficult to, if you said over 20 years, I'd probably have a more accurate depiction of what's going to happen, but 5 years is a relatively short time frame to forecast something out. And I mean, it's not like this is Calgary or, Memphis, Tennessee, or Apple stock. So in my opinion, I almost think it's completely useless to try to forecast where Vancouver real estate is going to be in 5 to 8 years. The thing I really care about is the monthly cash flow. And I don't even care about that in the sense that this is how much money I'm making. I care about it in the sense that how protected is my asset? Because obviously I don't want to be, buying a property where I can't service, if it's losing $800 to $1,000 a month and I can't service those payments, then I probably don't want to be holding an investment like that, right? So I'll run cash flow numbers for my investors and stuff like that for the purpose of being able to protect their asset. But to forecast where prices are going to be in 5 to 8 years is super difficult. I still do it, right? But I mean, I personally don't think it holds very much weight or value, and I wouldn't, put too much emphasis on that forecast. So, I mean, what I do is typically over the last 40 years, Vancouver real estate has appreciated 7% year over year. Vancouver real estate doubles every 10 years. So if you take the rule of 72, which is you divide 72 by the rate of, you divide 72 by the rate of return, and then that gives you how many years it'll take for your money to double, right? So if you do 72 divided by 7, you get 10.2 years. And that's pretty much spot on with Vancouver real estate. We double about every 10 years. So our rate of return is about 7% year over year, every year for basically the last 40 years. However, that is a very big return for real estate, and it's not something that I would count on happening every single year for the rest of eternity, right? Like, there's not a lot of markets, I don't think basically any, worldwide that appreciate 7% over a year. Like, the national average in the States is about 2%. 7% is, 3.5 times that return. So what I say basically is when people ask for a forecast, I'll do it, right? But the reality is you're not buying based on that forecast, what's going to happen. You're not buying based on the spreadsheet. You're buying because there's a fundamental imbalance between supply and demand in this market. And I'd say it's safe to ascertain that prices will have to go up solely based on the fact that there is not enough homes being built in comparison to the amount of people that there are coming into the country that need somewhere to live. And it's not like Bitcoin, where Bitcoin has a halving every 4 years and the supply gets cut in half. There's no way to tell how much demand is going to be on the other side. So even if there's lower supply, we still don't know how much demand there's going to be to actually purchase Bitcoin. But in Vancouver real estate, we know both sides of it. We know the supply is dwindling and, the cavalry is not on the way. And we know that the demand is increasing every year. So there's really only one way prices can go. And I know, obviously, I can see the comments already that, I'm your typical realtor and I'm a bull and I'm this and I'm pumping the market and blah. I'm just telling you guys, like, it's going to take nothing short of a 10 out of 10 catastrophe to keep Vancouver real estate prices down. I mean, they can do rezoning and they can, increase, they can, shorten the amount of time it takes to get an approval through the door to be able to build. But the problem is developing is a business, and there needs to be money involved for that, business to make money. So if prices aren't going up, there's not going to be a lot of meat on the bone for developers to build, and developers will just stop building, and the supply will come down, and then again, prices will go up. So even if they're rezoning and, they're, shortening the approval times for all these things, I really just think that it's going to, prices are probably not going to go down. It's just going to, soften the trajectory of which prices are going up. But prices will likely continue to go up, because if prices aren't going up, but the cost of labor and goods is, then developers will stop building, and we'll run into a supply issue regardless of what the rezoning, what the new zoning is and what the, application times are. And maybe we'll have some massive unemployment issue, or, the Canadian dollar will collapse or whatever. But all of those things equate to, we're probably screwed anyways. So I wouldn't even worry about those things, because even if those happen, you're probably going to be screwed whether you own a house or not in most cases. So I wouldn't have the mentality of, how does this look on the spreadsheet? I would just, if I were to buy here, I would buy here knowing that, hey, the supply and demand, imbalance is really bad here, which means prices are going to go up. Now, I can't, predictably say how much prices are going to go up, but I would say, it's pretty safe to say that predictably prices are going to go up. We just don't know how much. So if I were to invest in Vancouver, I probably wouldn't invest in Vancouver. I would invest out in the Fraser Valley, because everything seems to appreciate kind of at the same rate. And actually in the last 10 years, the Valley has appreciated a lot better than the Lower Mainland, anywhere west of the Port Mann Bridge. And the rental numbers don't change too much from Vancouver to Burnaby to Coquitlam to so on and so forth. So I'd rather own out in Abbotsford or Chilliwack or Maple Ridge or Mission, get the same appreciation or possibly even better, just like it's been in the last 10 years, but my monthly cash flow numbers look a little bit better. Obviously, they're still not good. Like it's not like a cash flow heavy beast, but it looks a lot better than buying in, say, Burnaby, where you're going to be negative $2,000 a month. It's a lot easier and safer to hold the asset in the Fraser Valley. You're likely going to get the same appreciation, and we're just as supply constrained out there. That's my take on investing in Vancouver. Subscribe to the channel if you enjoyed this. Like this video. I'm that Agent Kelly, and I'm making moves to move you. Peace.